Hey everyone, it's Benny the Finance Dog. Welcome to my channel. Today we're going to continue our education on technical analysis indicators as well as give you part 2 of the horrendous trade situation I had got myself in yesterday. With today's price action, we were able to get out, but continue watching to see exactly what the results of the trade were. Let's start with the education piece. Today we're going to go over what the VWAP is, or the volume weighted average price. It's a popular indicator for traders because it can help them identify areas of support and resistance as well as potential entry and exit points. Let's begin. So the volume weighted average price is a technical indicator that is calculated by taking the total volume traded during a period of time and dividing it by the total number of shares traded during that same period. The result is a weighted average price that reflects the overall demand and supply for the security. VWAP can be used to identify areas of support and resistance by looking for price points where the VWAP line has previously been rejected. For example, if the VWAP line has previously been found to act as a support level, then traders may look to buy a security when the price falls to that level. Conversely, if VWAP has been used as a resistance level, then traders may look to short the security when a price rises to that level. It's important to note that VWAP, like all the other indicators, is not perfect and should not be used in isolation. It's always important to consider other factors such as the overall market sentiment, additional support and resistance lines, global macro events, etc. Some of the drawbacks of the VWAP, like many other indicators, are that it can be slow to react to changes. It is a lagging indicator. Can be affected by large volumes of trading, which can distort the VWAP calculation. Similarly, yesterday's FOMC event, for example, would distort the VWAP, would be another drawback of these indicators. Overall, VWAP is a useful tool, but it's always remember it's not perfect. No indicator is, and please just use it in combination with your other risk management skills. Now, for part 2 of yesterday's trading fiasco. If you haven't already watched yesterday's video, please do make sure you like it as well while you're there. I will put a link just above here so you can click it and then come back. Now that you're back, let's go over what happened very quickly. So to recap, we bought our contracts for an average price of $103 per contract prior to the Fed report coming out at 11 a.m. of the 185 strike calls with expiration of June 16th, which is tomorrow. Those calls drew down nearly 70% for a low of $35 per contract yesterday before rebounding and closing at $60 per contract at the close of business yesterday. One thing that I may have mentioned yesterday about why I was confident to hold these overnight was that the price action was favorable in that Apple did close very close to a 184 level, and I was confident that it would continue with its upward trajectory and continue the bull run that it's been on for quite a while. This morning, that price action was confirmed with the pre-market trading actions. As we can see here on the 1-hour chart, it dipped down quite a bit before rebounding and basically opening flat, right? Didn't open up and didn't open lower than it had closed yesterday. So I felt confidence going into today to hold these, and the contracts actually gained value as pretty much right from the jump this morning. Apple continued to rally up and up and up, and as the first 30 minutes of the day unfolded, the contracts got more and more towards break even until about 7 a.m. this morning, which they actually reached break even. Now, I'd like to pause here and just talk about how significant that is, because for those contracts to go from their bottom of $35 per contract back up to $103 per contract may have been a 70% drawdown on the way back, but that's a 194% gain from their lowest level. And that by itself would have been amazing. And then from open to that level was a 70% gain. So given that, I had to think in context of the money that I had started with this morning and the money that I had finished with, and exited the trade at $107 per contract for a small profit. Um, and I was just happy to have turned my 70% loss into a 4% gain, right? So I was much happier with obviously the outcome. Basically, after paying commissions and everything, we're at a break even level. I was very happy with the result of that, as even though Apple continued to run and did very closely follow the levels that I had suggested in Tuesday's video. Here's a link to that if you need it. I did suggest that it would go kind of that 185, 185.50, 186 level. We did get above 186 today, and the contracts were worth plenty. But honestly, I was just happy to get out of the situation unscathed and live to trade another day. And so when it comes to risk management, the only advice I can give, having gone through that, is to not put yourself in a situation like I did by trying to predict major economic reports before they happen and be reactionary. If I had loaded the contracts after 11 a.m., I would have only been in profit and probably been in a better position to let them ride today from a mindset standpoint. And more importantly, I got lucky that Apple came back the way it did, and I was able to get out relatively unscathed. I don't consider this a matter of skill. I kind of just, for lack of better words, diamond handed it until Apple got me out of doggy puppy jail. So going into the rest of the day, I didn't take any other trades. I was just happy to get out of that one unscathed. Going into tomorrow, we do have a holiday on Monday, so I'm sure we probably will see some profit taking if I had to imagine. But tomorrow's another day to live, and I will be thankful that I got out of this situation great and just end it there. Hopefully, you were able to take advantage of the rally of today and make yourself some profits. Seems like almost everything was up. If you bought calls on anything, you probably banked. And hopefully that trend continues tomorrow and you practice good risk management. Maybe utilize the VWAP in a way that makes sense for you. As always, thanks for watching. Please like and subscribe for more content. Woof woof.